Ready? Okay, great. Thank you all so much for coming out today. It has been almost 10 years since we passed Prop 84 and a number of different initiatives through the legislature, but ultimately Prop 64 superseded all the things that we did in the legislature. And today is really an extension of the Cannabis Banking Working Group that was started under John Chiang when he was the treasurer. And then the month after I got elected as state treasurer, I actually testified in Congress at the only banking hearing, I think cannabis banking hearing that we've had. And there's been some movement at the federal level, but clearly not enough for many of us here today. So just want to thank everyone for coming out today and really cannabis remains one of California's largest legal agricultural commodities and supports thousands of businesses and tens of thousands of jobs. Yet many licensed operators continue to face significant barriers to obtaining basic financial services. Too many businesses continue operating largely in cash. That presents real challenges not only for business owners, but for employees, financial institutions, regulators, tax agencies, local governments, and law enforcement. Cash-heavy businesses create unnecessary public safety risks. They make payroll more difficult. They complicate tax collection. They increase compliance costs. Do I sound like a broken record? 10 years ago, I think we said the same thing. And they create opportunities for the illicit market to continue competing against licensed businesses that are following the rules. California has invested tremendous resources into creating a safe, transparent, and accountable regulatory framework. Our Department of Cannabis Control oversees one of the most sophisticated licensing and compliance systems in the country. Our seed-to-sale tracking system provides accountability throughout the supply chain. Yet despite these efforts, the conflict between state and federal law continues to create uncertainty for financial institutions. While there's been a movement at the federal level, including discussions surrounding marijuana rescheduling and continued consideration of the Safer Banking Act, significant barriers still remain. Today's forum is not intended to advocate for one particular policy solution. Rather, it's the opportunity to bring together experts from across government, financial services, public safety, and industry to discuss where we are today and where we go from here. We'll explore practical challenges, we'll hear firsthand experiences, and hopefully we'll identify opportunities that improve transparency, enhance public safety, strengthen regulatory compliance, and expand responsible access to financial services. I want to thank each of our panelists for lending their expertise, and I thank everyone today for joining us here today and online. I look forward to a thoughtful and productive discussion. I do want to thank my Chief Deputy, Patrick Henning, I believe Lori, also on your team, and others who have been preparing for this hearing for a number of months, just trying to get the right speakers to be here today. So we're going to open up to the first panel, the current landscape. Today, we will be hearing from Clint Kellum, California Department of Cannabis Control, as well as Chris Schultz, California Bankers Association, on what has evolved over the past decade and discuss federal and state policy environments where progress has been made and what significant banking barriers continue despite California's mature regulatory framework. So, Clint.
Thank you, Treasurer. Clint Kellum, Director, Department of Cannabis Control. Appreciate the opportunity to be here today. The overview of the cannabis market, as you pointed out, is, there's been a celebration of the 30-year anniversary of legalization of cannabis in California from Prop 215, followed by Prop 64, which started adult use sales in January 2018. And so we're about 8.5 years into a real legal regulated market here. The scale of the market is we have about 8,000 licenses, about 5,000 businesses, about $4.5 billion in annual sales. So it's a meaningful industry of crop value basis, I think it's the most valuable crop in California. And so there's a real sort of economic value and opportunity here. And we're seeing, growth and progress. But I think the thing that brings us here today is really the challenge that continues at the federal level, and the prohibition of cannabis, and how that really puts our operators and businesses on less of a level playing field. We see this play out in the 280 tax restriction. We see it play out in bankruptcy protection, IP protections, and banking. And so we're here talking about those. It's a tough business, as most folks will talk about, as there's significant competition, and not having a level playing field is challenging. One thing I think that is relevant in that word competition is sort of the stickiness of the illicit market that has been here to date. So, we're 8.5 years in, and our best estimates are that about 40% of California's consumption is coming from the legal market. So that's still 60% outside that aren't paying taxes, aren't following our rules, and those pieces. And so those pieces together put even more pressure on the lack of banking access and the normal capital allocations that are made to businesses, that are really important. But there has been some small headway. Rescheduling itself doesn't really immediately do anything as it relates to banking for California adult use businesses. But if you are a state medical licensed cannabis holder that's registered by the DEA or an FDA approved drug, it is now legal. And we've actually seen businesses uplist to the New York Stock Exchange in the last month. So impressive sort of change over a period of just a couple of months. I think the bigger, more scaled operators are able to find opportunities. I question whether the small, everyday small business is going to be able to have the sort of legal structure in consultation to be able to navigate that complexity. So with that, appreciate the opportunity to be here and have the discussion. I'll pass it over to Chris.
Thank you so much. I'm Chris Schultz. I'm the Vice President of Government Relations at the California Bankers Association. I track the last Cannabis Banking Work Group pretty closely. I was working on insurance issues, cannabis insurance issues for the insurance commissioner at the time, so participated in many of those hearings. And in 2019, I was the Chief Deputy Director at the California DFPI when that agency issued the guidance for state charter banks and credit unions about banking cannabis. The treasurer and the deputies know this, but I know the public's watching, so it's important to note that banks and credit unions can be state chartered by the California DFPI, or they can be federally chartered. But in both cases, the FDIC or the NCUA, in the case of credit unions, U.S. Treasury, and the Federal Reserve are also involved in the regulation of these financial institutions. The main point is that this is all built on a building block of a couple of pieces. The Cole Memo, which was issued in 2013 and then rescinded in 2018, the FinCEN 2014 guidance, which kind of tears off the Cole Memo in many ways, and then DFPI's 2019 guidance to banks and credit unions, which also built on the Cole Memo and the FinCEN guidance and work by the Conference of State Bank Supervisors. The key point of the DFPI guidance in 2019, which stands today, is that California's financial regulator will not bring regulatory actions against state chartered banks or credit unions solely for establishing a relationship with licensed cannabis businesses, but they also must comply with FinCEN's Bank Secrecy Act expectations. Fast forward to today, FinCEN reports that hundreds of financial institutions nationwide offer banking services to cannabis-related businesses. We don't know how many in California specifically. President Trump's December 2025 executive order, as a result of that, we all know the Justice Department rescheduled state licensed medical marijuana to Schedule 3. It also initiated a process for DOJ to consider rescheduling more broadly. The rescheduling, if it happens, of adult use only increases the need for the passage of the Safer Banking Act, which has been considered in Congress for many of the last sessions. It's bipartisan, it's bicameral. A previous bill passed the House 7 times. And importantly, it would allow banks to serve cannabis-related businesses. And this might be the most important part. It would require federal banking regulators to provide explicit, clear, uniform expectations regarding the treatment of all cannabis-related accounts. Our California congressional delegation is aligned on this. Representative Lou Correa is a sponsor in this Congress. Ranking Member Maxine Waters, Representative Young Kim on the Republican side. We have our congressional delegation is united and moving in the right direction on this. 32 attorneys general sent a letter calling for the passage of the SAFER Act, including California AG Rob Bonta. What I'm told by our colleagues in DC is given the floor to everything else going on in Washington. This does face challenges to get to the finish line in 2026. Kind of in summary, under the current legal environment, most banks and credit unions that are considering the space are already in. Rescheduling and the passage of the SAFER Act both require federal action, but it would move the needle substantially on the willingness of additional financial institutions to offer cannabis banking services. The most important thing about the SAFER Act, in my view, is that the guidance from federal regulators would be clear, explicit, and uniform regarding this, which is really important. I was talking with some of the panelists from panel 2 just before we started today, and about is there anything that the state could do or regulators could do short of Congress taking action. The FinCEN guidance is more than 10 years old at this point. If FinCEN were to revise the guidance, that might be a regulatory action that could help, that is short of Congress taking action. And also allowing financial institutions to rely on the good work done by the Department of Cannabis Control and the other regulators who have really scrubbed the books of these licensed cannabis businesses, so they're not doing their own work from scratch. Those are two things that might move the ball forward in the absence of congressional action. I'd encourage you to ask panel 2 more about that. I think they have some pretty good ideas about that. One thing I did want to note, slightly related, is our CEO, Kevin Gould, who could not be here, by the way, he's traveling, he sends his regrets, but he published an op-ed in the Business Journal very recently about private credit. And this is really important. Private credit lenders are not subject to the same disclosure requirements, capital standards, supervisory oversight as banks are, and they dominate in the cannabis space for lending. To the extent that we can bring more of this business into the traditional banking and credit union space, it's likely that operators will get better terms, but it also brings more of this lending into institutions that are within the regulatory framework. Thank you again for inviting us to participate, and happy to answer any questions.
Thank you. I did write a letter in support of the Safer Banking Act, so we're still tracking that. But I think, Clint, do you have like the numbers of companies or someone going to present the revenues? I know that you said that the revenues are about 4.5 billion.
Mm-hmm.
Were we expecting more 10 years ago? And what has been the trend? Because I know that a lot of the operators are having a hard time when they miss their sales tax payment, for example. It's 100% penalty. And so then that kind of starts kicking them out of the system.
Yeah, so I think for a couple of reasons, we're not at the level originally anticipated. So one was sort of the stickiness of the illicit market, and only 40% of California's consumption coming from the legal market. And, there's local authorization. So you still have 55% of states' jurisdictions that don't allow retail access. 30% of Californians have low or limited access. So there are still things within our own control about sort of making sure Californians have access to legal cannabis that will need refinement over time and improvement. So I would say that's one piece. And then I think there has been a steep decline in the price, right? It is an agricultural product that can be produced at scale. And we've seen that play out over time, really, especially over 21 and 22. And we're starting to see prices stabilize. Actually, according to our data dashboard, sales are up. They're in the black for the first time year over year in quite some time. So that's impressive. But units sold have been increasing over that same period of time. So we are seeing more uptake in the legal market, but we have seen a significant amount of price compression, not to a level maybe people anticipated originally.
And then what are we going to do about the 60% illegal?
Well, I say this, like, that is one of our main focuses. We're a regulator. We want consumer protection, youth protection, environmental protection. But right now, a lot of the state's consumption is happening outside of the market. And so we see 4 key pillars to getting there. Safe, trusted product. Our value add is you get tested product that you can trust from a safe source. So we need to have our normal standard regulatory fidelity of our licensed program. Continued pressure on our illicit market. We have law enforcement staff, CDFW does, CDTFA here does, and we all participate together amongst many other agencies on the enforcement side. Local governments are playing a role. The Board of State and Community Corrections just put out a couple $100 million. A significant portion of that is related to illicit market enforcement. And then touching on the piece I mentioned earlier, there's retail access that needs to be more accessible to consumers. Just a really important stat on this. In banned jurisdictions, this is a few years old, but we did a consumer survey. Those consumers, in banned jurisdictions, 62% of people thought they could purchase it there legally, 23% didn't know. The consumer market is fairly confusing when you think about intoxicating hemp, smoke shops, all these other things. Just our day-to-day constituents aren't really going to understand that complexity. So I'm not advocating for unreasonable retail access. I don't want, youth controls out of whack or any of those things, but there needs to be some access that's reasonable that an everyday person can get to. And then our 4th one is just making sure we're reducing friction on operators so they can operate within our license industry. There's no silver bullet. We've got, initiatives across all those pillars, and we're going to move the needle. It's not going to happen as fast as people want, but that's kind of our focus on getting to a higher proportion overall.
Director Kellum, you started talking about some of the initiatives that you guys are looking into the future, and that's really sort of the genesis of this is, okay, we've got to this point. What's next? And you started to talk about some of those, but I know that we'd love to hear about some of your thoughts on what the future of cannabis control is.
I mean, I think it is exactly what we're focusing on. It started like maturing in a market, like our market of like looking at, our legal market. How do we maintain fidelity? We just finished some pesticide regulations and fine tuning that. That's important, right, to the overall testing piece. We are doing more work on inversion and diversion. So we talk about that 60%. That is a listed market, but there's also people within our legal market that are perpetuating that. And that's a focus and interest of ours that we really want to put the clamps down on. I think across the board, there's an education sort of paradigm of like local law enforcement, federal law enforcement explaining what unlicensed and illicit cannabis is and the significance of that. Some of this unlicensed illicit cannabis work is organized crime. This is just another line of business for them, right? And there's a lot of other human harms coming along with that. And so sharing in that significance, really excited about that money that went out to the local governments focused on illicit market. We're going to be setting up some like work group meetings with them, having some initial conversations and sort of building off a collaborative effort to sort of, expand on that scope as well. And so, yeah, I mean, we're doing multiple sort of things across the way there to make improvement. We have a consumer awareness survey. It's only $1 million a year, but we're making trying to get the word out on those pieces, trying to have conversations with local governments that don't allow it to understand why. And it's complex and challenging on their end. I don't dispute that in any way. So yeah, a host of initiatives.
And what happened to the metric system? Because I thought that was the initial track and trace system. And then when I went to go visit some of these farms, they were using their own system because that system wasn't really working. So it was like duplicative.
So we use track and trace system as our system of record, but it is quite common for operators to have other systems, whether it's their ERP point of sale system, and then they'll have interactions in between the two. I've been to facilities where they have like a warehouse management, they're using track and trace. They have their own sort of like online digital platform that's all going into. So you see multiple sort of platforms being used, but our source of record for like when we come in, I mean, the one thing that I try to go out to licensees and tell them is, please make sure your product is in track and trace in an accurate way. Because outside of that, our thought has to be like, where did this come from? Why isn't it in the system? And so that's our source of fidelity.
Okay.
Then, Mr. Schultz, as a representative for California bankers, what would you, as the Bankers Association of record, like to see moving forward from the state of California when it comes to this? I believe that we're about to have a new governor who has extensive experience this from being over at HHS, where they started the process of lowering the classification of marijuana. It has some experience there. So I think this is an issue that we're going to be tackling.
Excuse me. Thank you for the question. It is so difficult because I didn't do a great job explaining my opening remarks, but because banks, especially, and also credit unions to some extent, have this federal touch point, without the federal government moving, it's hard to move a lot farther with our California regulatory environment, right? You have the FDIC, which is insuring these deposits. You have the Federal Reserve in some cases, and then you have FinCEN under U.S. Treasury. All of these are creating requirements for financial institutions. And the exciting thing about the Safer Banking Act is requiring them to move in unison and coordination. In the absence of that, could we do more? It's a great question. I will look into it. But California moving on its own, like if DFPI adjusted its 2019 guidance, I'm not sure that encourages more banks or credit unions to get into the market.
Question? Yeah, Mr. Sheldon.
Hi, and thanks for joining us. So, and I may be being dense, but I want to just a couple things that I'm not sure I'm totally following. If the banking system were to open up to legal providers, how does that reduce the amount of illicit providers still operating? Because isn't part of the issue our tax structure on the actual product itself driving illicit product to a lower pricing level than?
So there's no silver bullet here, but sort of the banking access today comes probably with higher know your customer requirements than in most other banking businesses. And we're talking about private credit, other more expensive forms of capital. So banking by itself doesn't end it, but it helps shrink that cost differential between what we have to pay in the legal market and the illicit market, because there is price competition. We have a market cannabis market report that was completed based on 2024 numbers, and you can see cannabis prices across states converge. And that would really only happen without the illicit market. So there is an actual price competition going on between the legal and licensed market. And so it's just another place where you can sliver off some cost for the legal market to help with that price competition. Because obviously the illicit folks are dealing with a risk reward conundrum. They have a lot of risk on their end, but right now that's quite profitable. If we continue to shrink that and make it less profitable, there'll be a point where that risk will seem too great.
That makes a lot of sense to me. And I guess the other question that I was kind of thinking about on private credit also makes sense to me from a lending perspective, that private credit would be involved in some of these businesses at a higher cost, as you just pointed out. But the illicit market doesn't really have access to credit necessarily at all, I think, although perhaps you could enlighten me on that.
I'm not aware of anything. I mean, we know they're
You're
using
not
our
lending to them
financial
yourself, is that what you're saying?
institutions, right? That's actually a great investigative resource, right? When we can access it. And so I'm not aware of that, right? It is a cash-based business. There's multiple lines of criminal activity that they're conducting, and cannabis is just one of those other ones.
Okay, so they're operating perhaps on scale, but on a cash basis relative.
And
to
they're
somebody trying
laundering
to grow.
money and doing other, stuff that typical organized crime does.
Yep. Thank you.
Thank you very much. Okay, we will have the next panel, Banking Compliance and Financial Innovation. This second panel focuses on the financial institutions serving this industry every day. We'll hear how banks and credit unions manage risk, meet federal compliance requirements, and evaluate opportunities to responsibly expand financial services for licensed cannabis businesses. So we will have Tim Rademacher, Vice President of the Cannabis Banking Mission Valley Bank, Adam Crabtree, founder and CEO of NCS Analytics, Pat Duncan, Vice President of Cannabis Banking Program with Community First Credit Union, and Frank Espinoza, Executive Vice President, CRB South Bay Credit Union. Okay, let's start with Tim.
Thank you, Treasurer Ma, and thank you all for being here to discuss how we can better integrate cannabis businesses into the financial system today. My name is Tim Radmaker, and I am the Vice President of Commercial Cannabis Banking at Mission Valley Bank. I've spent the better part of the last decade helping banks and credit unions navigate cannabis compliance so that we could serve these people within this industry. Today, my team and I serve cannabis operators up and down the state of California and beyond. Our clients are part of the integrated supply chain, and we serve all license types. In my time as a banker, I've seen firsthand the dedication, pride, and resiliency of the cannabis community, and I've also seen their struggles. They are burdened with high cost of operations, regulatory uncertainty, and impacts from the illicit market. And in my time as a cannabis banker, I've learned two things. Cannabis can be banked. It can be banked. It can be banked according to regulations safely. And I've also learned that cannabis is unlike any other market that banks choose to serve. As a cannabis banker, there's always a lingering fear in the back of your mind. No matter how good your compliance programs are, how resilient your systems are, that fear of someone somewhere saying, yeah, but are you doing enough? People ask me all the time, what's it like to be a cannabis banker? Why is it so challenging? It's a fun conversation, but I use an analogy. I tell people it's like you're trying to board a plane, and there's a TSA checkpoint every 50 feet on your way to the gate. You show your ID, you get verified. You move on to the next one, you get verified. And you finally get to the gate, and the agent then asks you, did all the other officers before you follow the correct protocol and procedure? It's just a constant moving target of trying to make sure that these businesses are actually compliant and that they provide evidence to show that their risk is not too high for the banking relationship that we have. After a decade in this space, I'm less concerned about my cannabis clients that I bank, but I'm more concerned about the massive systems that we as banks have had to put in place just to bank this industry. Banks spend millions of dollars trying to develop systems and processes to answer a question that should have already been answered based on state data. Those questions are, is this business compliant today, and can I bank them? These are simple questions, but it's not easy for banks to answer them because banks have an expectation that we have to independently verify everything that our government has already done. And that creates inefficiencies, that creates increased costs for the banks. And the problem is that those costs don't stay at the bank. They get passed on to our customers. And the high cost of cannabis banking is because of the infrastructure that we are required to put in place just to bank these people, these companies. And as long as banks have this expectation that we have to re-verify everything that's been provided every 90 days for the life of the relationship with this client, I'm afraid that cannabis banking prices will not come down. We will not develop more access. As I think it was mentioned earlier, larger operators have the capacity to pay those fees. They have the teams involved that can help support the banking relationship with compliance checks, but smaller operators don't have that ability. And they get priced out of having access to the financial system. And it's a sad reality. So when I look back, over 10 years, what's gone on? Well, 10 years ago, we were asking the question of possibility. Can California cannabis be banked, right? Will it survive? Well, today I think we have to ask the question of scalability. What can we all working together do to provide more access, provide more efficiency for the banks that choose to bank cannabis, and probably most importantly, provide more affordability to the cannabis market. And so the challenge before us, I think, is straightforward. How can we leverage trusted regulatory data and technology so that banks and operators together can work to lower the cost and make cannabis banking more scalable in the future so that we can support the entire cannabis industry, not those few that can afford it. And so that's a conversation I'm very excited to have with you here today. So thank you very much.
I wanted to start by thanking Treasurer Ma and the rest of the dais for allowing me to participate in this very important discussion. My name is Adam Crabtree. I'm the CEO of NCS Analytics, and I am a recovering banker. Before starting NCS, I spent the better part of a decade managing banks of various sizes there in Denver, Colorado. And as most bankers are, I was managed to a balance sheet, and I was trying to figure out how to get part of Colorado's then billion-dollar market onto mine. Got a background in mathematics, and so I started playing with various ways to help my compliance team feel comfortable that every dollar being presented for deposit was from state legitimate activity. One thing led to another. I was thrown in front of the then governor's office, and they posed the question to me, if banks can get to this level of detail, why can't we use it? So at that point, NCS was born. That was in 2015. We actually celebrated our 10-year anniversary last fall. Since then, we've grown dramatically. We currently monitor about 18,000 licenses across the US and ingest somewhere between 80 and 100 million data points each week, all of which runs through our analytics engine, and it's capable of generating hundreds of tiered alerts that help to better understand what's actually going on in these operations. At this point in time, there's one, maybe two companies that have more cannabis data than we do. Many cannabis regulatory programs require seed to sale tracking for each stage of the production. This mandated data provides a unique level of detail that financial institutions can use to provide banking services while complying with federal banking guidance. But the amount of data that comes out of these systems can be overwhelming. So the majority of our use case is helping to separate the important data that needs attention from the rest of the noise that comes from it. Despite our growth, our mission and our clients remain unchanged. We still only serve government agencies and financial institutions. We currently work for the state of Oklahoma, Delaware, West Virginia. We've done work for Vermont, Michigan, and even some local governments here in California. Our regulatory clients rely on our platform to parse through the tens of millions of data points that are fed into their tracking systems each day to help them pinpoint where their attention is needed most and which team is best suited to handle the issue. Our platform aids in everything from routine inspections and financial audits to recall support to identifying sophisticated cartel and organized crime associated inversion and diversion operations. For example, we completed a study for the state of Michigan using our platform to help identify their existing tax gap and the most likely areas that product was being inverted and diverted from their regulated market. Our financial institutions trust us to provide the absolute best data and analytics to ensure that they're capable to exceed their legal, regulatory, and reputational requirements while remaining cost efficient, effective, and innovative. An easy and recent relevant example of that innovation is our new lending tool, which we released earlier this year, stemming from the recognition that there's a severe shortage of available capital in cannabis, and the little capital that's out there comes with either eye-popping interest rates or anchor chain-like covenants. This is a particular issue with social equity applicants who struggle to secure the capital needed to support their business. We recognize that there were a number of interested but skitterish institutions that wanted to participate, but they just couldn't get comfortable. So to no one's surprise, I turned to data. We built NCS THEA, and the backbone is the regulatory data referenced throughout this and by Director Kellum. That is the system of record. It is the only data in cannabis that is legally mandated to be correct, and it allows financial institutions interested in participating in this to do that with a higher degree of certainty. Needless to say that we have seen dramatic changes in the cannabis industry during our tenure. We watched markets grow, launch, evolve, and sometimes falter. We've had front row seats to the evolution of the cannabis banking industry from the early believers, the profiteers, and the visionaries that could see the promise of the cannabis industry long before anyone else. At this point, we've seen 2 to 3 evolutions of every innovative payment solution there is out there. Couldn't resist that one. Appreciate the opportunity to be here today, and in summation, I believe I can offer a unique perspective as both the haggard old man in cannabis, as it is like dog years, but also as someone who's voyeuristically watched an evolving industry from two very distinct yet intertwined perspectives. Thank you.
Thank you so much, Mr. Kedford. Ms. Duncan?
Hi, I'm Pat Duncan. I'm with Community First Credit Union. I'm the VP of Cannabis Banking. Just a little bit about Community First. I had a slide put up there. We were established in 1959, our charter. We are a teachers credit union just serving Sonoma County. I joined the credit union during that time, so I've been there a while. And during that time, we did go through a charter change and a name change to Community First. And over the course of the years, we've had a few mergers and expanded our footprint. And so Sonoma County, Marin, Napa, Lake, Mendocino, Humboldt, and Trinity. And we serve about 58,000 members. And if you'll notice, the last three counties are part of the infamous Emerald Triangle. And so that kind of got us going about, should we be banking this? We do have 10 full service branches, and we also offer digital online banking, checking, so on and so forth, consumer lending for our members. And we started serving the cannabis industry, actually opening our first new cannabis account in 2020. And so what we offer to our members, checking, savings, debit card, ACH, domestic wires, digital banking. And it's been really great to build these relationships and hear from our members. Hey, it's nice to be kind of like a normal business. I can make payments these ways. I don't have to carry cash everywhere to pay a distributor or some other kind of bill. We have a dedicated CRB team, so I have 4 staff members that report to me. They're responsible for monitoring. They each monitor about 30 accounts a piece, and they're responsible for monitoring that activity. And that's where that regulatory burden comes in, as Tim mentioned. There is a process that we must follow every 90 days. We have some accounts that we're looking at more frequently. Why? Because of the volume of the activity. It's a lot of work to process all of these transactions, understand the source, ask for validation from the members. Can I get a copy of that invoice, or can I please get your sales report? And we do look at metric data as well, but we're having to spend that time reconciling that. And while AI helps us, it's still, our eyes need to go on this to be able to check the box and say, they're operating legally. We're good to go. We do business visits with our members. I love business visits. I love going out and seeing what they do. Go into their retail space, go into their cultivations, indoor, outdoor, manufacturing, understanding what they do, and just sensing the passion and the enthusiasm that they have. So it's just it's a difficult space to be in to maneuver because of FinCEN guidance and add on to that state guidance, and understanding we're asking people who are maybe just beginning to step into the legal space, we need these things. In order for us to bank you, this is a part of the process. FinCEN guidance was initially issued for DOJ employees, not financial institution employees, and yet that element was put into our guidance. I'm not law enforcement, and I won't necessarily drive up into the hills to look at your cultivation. Or maybe you're a little bit too far for me to do that in a day. So those are things, if some FinCEN guidance could be updated, because we're looking at things that the DCC already verified. And guidance even says, hey, you can rely on this, but yet when we are examined by NCUA or DFPI, questions still come to us. So did you verify these things? It's a duplication of effort. And so, but regardless of that, we love our members. We have really great members. We do. We have some that have the business acumen. They understand the burden we have. They even adopt, some of them, they go, hey, we're taking, elements from the banking industry and applying it to our business because we want to make sure we're compliant. So that's our experience. I actually enjoy it. And, it's wonderful to meet new people and find out more about what they do and, assist them in being able to operate like a normal business.
Appreciate that, Ms. Duncan. Mr. Espinosa?
Good afternoon, Treasurer Ma, rest of the dais. I appreciate the opportunity to be part of the panel today. Frank Espinosa, Executive Vice President, Chief Risk Officer at South Bay Credit Union, operating under the subsidiary of Emerald Beach Financial, which is our cannabis side of the house. Started banking the industry in 2018. That's why we have a subsidiary. Back when we just started, we thought it'd be ideal to be able to track and identify our cannabis members directly. We started with the philosophy that most credit unions operate in and all credit unions operate in, and that's people helping people and serving the underserved. We saw the need not only for cannabis business owners to be able to have access to traditional banking, but also a community safety issue. We were seeing a lot of news reports throughout California of incidents where large amounts of cash were either being transported or having to be held in certain places, leading to security issues and potential violent situations. So we did see a need to be able to provide that to the industry. I had the opportunity and the good fortune of being able to partner with a compliance expert in the cannabis space early on and ask the question, what can we do? What do you need? The answer surprised me because it was, I need to be able to write a check. Can I write a check? Can I deposit cash? What can I do to just be able to bank traditionally? With that, and a lot of support from our board of directors, we were able to develop a compliance forward cannabis program. And just echoing what the previous panel said and my fellow panelists here, that was a venture in itself with limited guidance and limited direction. We decided to err on the side of caution. So we were very, very cautious of how those accounts were being brought on. A lot of the times we're duplicating efforts with the state's efforts already for their licensing, requiring same documentation that they may have already received. And in the beginning, maybe not completely understanding what needed to be reviewed on the documentation. So other than collecting the data, really what was the next step? Luckily, going forward, we were able to have open dialogues with the state as well as federal agencies and create a little bit more of a directed approach to banking the cannabis space. Unfortunately, it was not an end-all be-all solution. And depending on the agency that was being in charge of the review, there were still gaps. I'm happy to say that since that time, we've come a long way. 2018 to now, almost 8 years in the space directly. And we still have our first cannabis client, thankfully. They survived the pandemic. They've been banking with us and they are now cashless. I tell this story constantly. They went from having 18 safes in their back office filled with cash to one small safe under a desk in an office. And I think they keep it because there's no longer that need to keep that cash on hand. We would get calls all the time. Hey, are these checks valid? Because they were paying individuals with checks. They were paying their vendors with checks. So the fact that we've come that much in the journey together has been great. I've had the opportunity to work with a number of different credit unions and banks in establishing or having discussions and getting into the cannabis industry itself. One of the things that I run into constantly is the misunderstanding that federal institutions or federally insured or anything backed by the federal government cannot bank cannabis? I get that question a lot. We're federal. Can we do it? Absolutely. As long as you do it compliantly and within the guidelines that we do have. We've worked with a number of financial institutions in setting up their program. It's a time-consuming setup. It takes a lot of resources. There is already an alphabet soup that comes along with the Compliance and Bank Secrecy Act, BSA programs. The cannabis initiative is BSA on steroids. It now requires for you to be specialized in cannabis to be able to move forward and understand the industry itself and be able to bank them compliantly, protecting both your consumer, your members, and the credit union. The biggest challenge that we see currently facing the credit unions is the required amount of enhanced due diligence, as well as mandated reporting. I believe Adam mentioned, or Tim mentioned, the required 90-day review and mandated filing, regardless of any suspicious activity or any nefarious activity or any indication of wrongdoing, is cumbersome. We personally had to break it down into quarterly reviews so that we can provide the information, the data, and the time to review each account and report accordingly. While we like to be a partner for our cannabis members, we share in their struggle and in their pains as far as being able to do the simplest things as far as collect payment on information. The fact that you can't use a credit card or a debit card to cannabis makes it very difficult for us as financial institutions to reconcile one-to-one transactions. They're having to rely on alternate means of funding and payment, which Adam alluded to, that may not necessarily be safe for them. It puts them in a financially difficult situation where they may be exposed to losses. And while we support them as a financial institution to accept the payment solution and be able to reconcile that and keep their bank account open, we cannot protect them from the exposure to a loss if a vendor disappears from one day to the next and there's money owed to that particular cannabis related business. In closing, I just want to say how grateful I am to have been given the opportunity to participate in today's panel, and thank you very much.
Great. I have a couple questions. So Mr. Espinosa, you said that some of your clients are cashless.
Not cashless 100%. They've come a long way. So they don't use cash as often as usual. So they're still collecting cash at a dispensary level, but their deposits are now coming into the credit union and they're able to pay in electronic means, ACH, wires, or checks a lot more than there is. So I would say the reduction has been about 80 to 90% for this particular client.
So for sales taxes, I know CDTFA is coming up next, but do we still require everyone to hold their sales taxes and pay quarterly, or can they deposit their money more often? Because that was the amount of cash that would sit there every single day. You have to, separate the sales taxes, put it away someplace, and then if someone figured it out, that was a problem.
We allow our members to open sub-accounts for their taxes so they can deposit the tax money specifically or mark in an account for that.
Okay.
And then we also have the folks that say, hey, I need to pay my taxes tomorrow. Can I come in and make a deposit real quick? So we have a combination of both.
Okay.
But for the most part, we're seeing taxes either being paid via check or an electronic means of payment, ACH.
That's good. And then you talked about the high fees, all of you. How much are fees now? Does it depend on the revenues or how much product they're selling? How do you all base your fees for these customers?
I'll start. There's many different schemes and strategies for how banks and credit unions apply fees to the cannabis industry. And some of them, in my opinion, are better than others, more fair and equitable. We use relationship-based fees. So there is a cost to the banking compliance that we have to do, and we have to cover that cost. But we give all of our operators the opportunity to decrease costs with the expansion of the relationship. So deposits on hand, whether they have a loan product, anything that we have that we can help drive costs down for them because the bank can make revenues in different channels, we will do that. The industry has been using different methods of feeing. So some will have a high flat monthly fee. Some will do transaction-based fees. So percentage of deposits that come in, especially cash. A lot of operators have complained to us that, they were with institutions where they went to deposit $1 million, and when they saw their bank account actually only had $998,000 in it, percentage of deposit fee. Anyway, the fees are necessary. It's just the industry is tired of having to pay these fees. They honestly don't think it's fair. But when we have to explain that because we have so much work to do just to maintain a relationship, we have to cover our costs, they'll tend to understand, and they're going to shop for the best value. So service quality and cost are the most important things to the operators.
And then Adam, you talk about operating in other states, and I hear a lot that, oh, Tennessee is opening, so people are moving to Tennessee, and oh, it's too difficult, so now they're shutting down Tennessee, they're moving to Wyoming. Like, what is going on with these different states? And are there, I know Colorado started first, are they still doing as well as they thought? And then, Washington State, then I think we were number 3.
So it's actually a fascinating economic study. As we're looking at the evolution of these markets, one of the biggest drivers in the profitability of a cannabis business is that structure of a market. If it is a highly restricted in terms of license count and things like that, it is more profitable. If you look at states like Florida, Arizona, places like that, where the licenses are incredibly limited, that allows there to be retained profit by these operators. In the more free market states, or the states where licenses are easier to come by, competition pushes that price down.
Mm-hmm.
The problem is, I'm sure we all remember a few years ago, the green rush, where these companies were building out absurd valuations, billions upon billions of dollars that was never realized. And so their CapEx is set at a level they could never overcome, which is not something anyone likes to see. Overall licensing decline nationwide is actually down. It is not continuing to increase, even when you factor in the emergence of new states. And that's because a lot of folks thought that this was going to be their winning lotto ticket without realizing that 10,000 other people in their state felt the exact same thing. So we are seeing that as markets mature, but also as markets mature, we see the stability. We see the operators that are doing things correct and doing things that enables them to work with the folks like this up here on the dais that are willing to help with their banking. They're willing to extend credit, all of those are allowing them to grow. So it's kind of a weird upward, and then we see a downward slope where there's a contraction within a market, and then we see a stabilization that allows them to grow and be successful. But it is fascinating to watch, especially in states where they are the only island of legalization anywhere around it, and then suddenly their neighbor state opens up a market, and no one can explain to me why the profits of the original state suddenly drop off, as does their tax revenue and things like that. It's shocking. Of course, only being slightly sarcastic about the product just flowing out of the state. But it's been truly a fascinating economic experiment to watch the evolution from a regulatory, but also as a new market opening. So, yeah.
And are there states, like, is there one state that is like doing things well?
I'm not pandering, I promise. I actually think you guys are doing it quite well out here. You had a Herculean task with the size of your market. You also had to bring regulation into a well-established market. I mean, let's be honest, weed has been functionally legal for California long before when it was actually on the books. And so it's been pretty impressive how much work has been done to bring this industry into line, considering where it was started from. So that's been pretty impressive to see. And then obviously Colorado, considering we were running without a playbook, I think did all right for itself as well.
And you guys are all in banking, and I hear that interstate commerce, you're like, oh, neighboring state, how did they get it? I mean, it's going across state lines. Like, shouldn't that be part of the discussion? And is it part of the discussion? Similar to alcohol, you're not just selling alcohol in one state.
So interstate commerce, I think, is actually another, not to be repetitive, interesting topic. There is mixed feelings when you discuss that with the industry. It obviously opens up new markets, but it also dramatically increases the competition. It is often speculated that classic sin industries, alcohol, tobacco, cigarettes, things like that, are not in cannabis because they're not able to achieve economies of scale, having to build out each state individually. And so the fear and speculation is that once that goes away, it will allow the incredibly well-funded classic industries to move into this space and dramatically and negatively impact the cannabis industry. And so that is a fear. So there will be some winners, but there will also be a lot of losers. If we take the entire cannabis industry's revenue, both regulated and illicit, I imagine you probably wouldn't be a rounding error on a lot of those companies' balance sheets.
Okay, great. Stephanie.
Thank you, Mr. Crabtree, for the kudos for California. Although it sounds like we still have work to do. So for Ms. Duncan or for the panel, we continue to hear about this 90-day required review and some of the barriers that you mentioned. I'm curious, given the process that you outlined, how much of that is automated? I heard you say, AI is used for some of it, or where can either fintech companies or where can we make improvements there?
Well, for us, AI definitely assists. We do utilize a software company that is fine-tuning their AI process and we are looking at transactions. Some of our members have very high volumes. So to look at them on a quarterly basis, it's a monumental effort to digest all the information and file the commensurate report and SAR within the time period we're given.
And who is the software company and how do you define high volume, if you don't mind?
So the software company we use is Standard Seed. And high volume, well, we're looking at transactions that exceed, 200 plus per month, and it varies up and down. So these are retailers, and we have 2 in our area that are doing very well. And they're expanding their empire, shall we say. And so we do look at those more frequently, just so that we can be timely in the things that we do. So we look at some of our more high volume members on a weekly basis, just so that we're capturing, and if there is a concern, we're addressing it early. We're not 3 or 4 months behind on what was that, how long ago. We're able to address the concern early. And so when it comes to what we are looking at and what we're required to do, we need to be able to vet the funds coming in. Is it consistent with what we see in a metric report, what we see from their sales report and the deposits that come in? Does it make sense? Is it within a range? We have an understanding that their sales on a metric report might be 30,000, but their deposit's going to be higher. Why? Sales tax, local tax, state tax, excise tax. So we have to be able to understand that as we're looking at it and go, does this make sense? And then we have to file that report, at the end of every 90-day cycle. And so that's kind of what drives some of the pricing that we talked about. And when we started in cannabis banking, there was a wide range of pricing. And you have to add into it, if you are utilizing a software provider, there's a fee that they're assessing to you. Ergo, we need to recover that along with other software, programs we use to file our reports, and then the staffing costs. And so pricing, I did have a staff member that went to the ACB. In fact, I think Adam, you spoke at it, ACB conference in New Mexico. And generally, I guess across the US, pricing ranges from $250 a month to $500 flat rate. But then there's other fees that are associated. We assess a high volume fee. If we have to look at your account more frequently, it's going to cost more. So, but we do explain that. And I think education to the cannabis business members is significant and important, that they understand the regulatory burden we have. Ergo, we need to offset that time and cost. I hope
Thank
that
you.
helped.
It does. Thank you.
Thank you. Good afternoon. One question that, and it could be for any member here. Folks have talked a lot about the problems of duplicative efforts and the need to kind of like verify and re-verify things. Could you give a more specific example as to one type of information that you're getting that you are then having to like re-verify from someone else? Because what I then want to kind of get to is like, who's the original owner of that data and who should be kind of like certifying it so that the burden kind of rests there?
I can take that.
Please.
The data that's collected at the state level for licensing is very, very detailed. They're collecting anywhere from information from a certain county or the city itself to make sure that they're going to be able to be facilitated and licensed in that city. Organization documents, things of that nature. And in the process of onboarding a new cannabis related member for us, we then have a checklist that is reviewed when we are examined, asking if we have all that documentation as well. So rather than being able to depend on the fact that this business is licensed by the state and therefore provided proof of this documentation, we're then collecting the documentation again so that we can have it as reference for when we are examined.
I'd like to just add a little bit for clarity's sake. We've mentioned the FinCEN guidance on marijuana banking. One component of that guidance requires banks to actually request the application data from a licensee from the state regulator that controls cannabis, so DCC in this case. So if a bank is required to do that, how do we share that information? DCC has developed actually a way for information sharing between banks. Both the bank and the customer have to sign an agreement that that can be done, so DCC can then act on that request. When we make these requests for the application package, oftentimes it'll take weeks to get the response back through DCC because there's a ton of information that has to be reviewed and redacted. When we get the package, it's oftentimes 600-700 pages long because it's not just the application itself, it's every email communication between DCC and the applicant. It's every lease that the applicant has. It's a ton of information which isn't really germane to the banking discussion that we don't really need to have access to. And it would sometimes create more questions than answers. But we have to request that, we have to look at that and then determine whether or not we believe it to be true that they are licensed as said in the application data, which is a monumental task. It would take hours and hours to do. And, we're not lawyers. We're not Department of Cannabis Control specialists. But this is just an example of the kind of burden that's placed on banks to become a quasi-regulator in law enforcement, which we don't think is absolutely necessary. Compliance is necessary, risk management is necessary, but things like this are just too far, in my view.
Thank you. And one additional question is, as you guys have talked about the, your entrance into the cannabis market, particularly for the, for the bankers, what are and as we've heard, like, a lot of folks are still going into, private market for their financing. What are some of the rates or some of the terms that you guys have seen from clients who have kind of like gone to them and then realized that they can come to you?
So we are actively lending to the cannabis community now. And so I've seen many loan requests come through. One that is more illustrative to your point, I had a client who had a private loan secured against his farm from over $1 million. It was non-amortizing, had a 3-year balloon note, and it was at an interest rate of 19.8%. So if you do the math on that, he would never pay that loan back. So we were able to work with them to get them into a traditional loan so they can refinance that debt. It is amortizing. They have good terms. They're very happy with it. And we got them a loan at about 9.5%. So that's a huge benefit to the industry if banks can actually make traditional loans, because it's going to free up cash flow. It'll give them an opportunity to actually, expand their business, grow, but not be straddled, like Adam had said, anchor chained with terms and conditions that they'll never be able to live up to.
Yeah, and just to add to that, I can echo Tim's experience with the interest rates he saw on the CRE side of things. For revolving credit, the likely cheapest capital they have access to is going to be an owner's personal credit card. So your mid-30s for that one. If you have to go private, it's going up from there. Short-term lending in cannabis will run you about 48% a year. And that's before we tack on the fees and things like that. Now, if they want to do it as a quasi investment, that was the tongue-in-cheek comment about the anchor chains. In a lot of states, that is a thinly veiled ploy to just take your license when you miss a payment. So the private money market is very difficult, which is why we are into the lending space for interested financial institutions that want to do it responsibly.
One question. So you bankers have proven that you can bank cannabis businesses. I think that's clear. I think the lending sounds to me like it's nascent at some level. It's growing, perhaps in the case that you just referenced. How do you see that going forward? I would think a lot of the legal cannabis businesses would see banks such as yourselves and say, I need to go to one of you or some of your fellow entities that are banking the system. What is it? Is there heavy growth in this area, or is it limited by where you're based? What are the barriers to getting to a banking relationship?
I can talk about the lending aspect again. First, many of the banks and credit unions that provide deposit services to the cannabis community today do not actually engage in lending. So you can write checks, you can get money in, but you can't borrow money there. We're relatively new to this. We've been doing lending per se for about 2 years. It is highly sought after, and you can understand why, because the industry had to be grown on, founders' own capital, friends and family, and then to refinance and grow, you had to go to private lenders who, as Adam said, are usually going to take their pound of flesh. We have high demand for loans. And I have these calls with these cannabis operators. Some of them are very sophisticated. They'll give you everything you need quickly, and they know how to actually do this because they've been in other businesses, other industries. So they're accustomed to banking. Other operators, this would be the first loan they've ever got from a traditional bank. And they probably need it more than anyone. But I tell everyone that we have a conversation with, look, the lending process is simple, but it's not easy. The reality is we're a bank. We have to make good risk, and we're going to have requirements that you're going to have to meet in order to be a quality candidate for this loan. And unfortunately, because of the experience through the market volatility and just shifts in cannabis in California over the past 3 or 4 years, they don't have the track record. Their cash flows are impaired. They're trying to expand or even just maintain, many times on a shoestring budget. And one thing that would help is being able to refinance that debt, free up cash flow, spread out that cost over time. So we look every time, and we try to make the deals every time we can. And when we can, they're very, very grateful to have it, and they perform very well. So I think cannabis lending has to expand. I think other banks and credit unions are going to have to step in to actually meet that demand. And that will make it a more level playing field for the entire industry.
Thanks. And then I guess a follow-up, this is all balance sheet lending by your bank.
Correct.
You're not able to recycle that. You can't securitize it, correct? It doesn't come off the books. You're effectively waiting to be repaid.
Yeah, we hold these loans. So I think what you'd be alluding to is called participation, where you have interbank cooperation. There are banks that I think are beginning to engage in that because they can't make the loans of the size that are required. I think that would be, again, a useful evolution in cannabis. But today the risk in cannabis banking is there and also in lending. Cannabis companies currently can't file for bankruptcy, so we don't have that bankruptcy protection as well. So we have to be able to collateralize against the owners, the owner equities that they have, and also the real estate and the collateral of the business. So that's where the challenges come in.
Interesting. And then just one final question, I just wanted to clarify. So I think one of you said you do offer debit card access for your cannabis companies, but that doesn't extend to the retail customer at the store, correct? They can't use debit cards to purchase product. Is that right?
Well, they can't use credit cards. for
Credit
sure.
cards.
Yeah.
They could use debit.
Depending on the POS system, right, Adam, as you laugh. Depending on this, the POS system that they use.
Okay.
It's called a PIN debit process, and it actually posts like a ATM withdrawal
Gotcha.
transaction, so to speak.
Yep.
But we allow our members, our cannabis business members, to have debit cards just for daily expenses, but they're not allowed to use it for any form of cannabis payment. They cannot pay a vendor using their debit card.
Gotcha.
That's not allowed.
Thank you.
Think to clarify the reason that we have these restrictions and also the chuckle about making purchases with a debit card at a dispensary level. The reason is that the card brands themselves, the networks, American Express, Visa, MasterCard, they have their own rules, like a quasi-governmental body, right? So if you're going to participate on that network, you have to follow their rules. One of the rules is you cannot use the card and their branded network for anything that's illicit activity. So therefore, there's these workarounds for purchasing cannabis using a debit card as a consumer. And then there's restrictions on our end as a bank. If we're going to issue a debit card to you, do not buy cannabis with it. Just so you're aware.
Yeah.
The other challenge with debit cards and not being, we can't issue a credit card to a licensed cannabis company either in the company's name. These things are challenging for the operators because, for instance, licensing, the fees for licensing and also, other fees that have to be paid, they accept debit card online, right? Use your debit or credit card. As far as I'm aware, the DCC doesn't accept wires for license renewals. So, you kind of have a cash intensive business, industry that has to figure out how they're actually going to make payments to the state and other bodies. And they're asked to use a credit card or a debit card. So it's on its face a little silly.
And just a little bit, I won't get on my full payment soapbox, but I think one of the challenges and why I used the term in big air quotes as innovative is, yes, there is financial innovation. Yes, there are a few companies that have figured out ways to stay off of the private rails to do this in legitimate ways. For every one of those, there's 15 that are promising solutions that put these cannabis businesses at risk. They just, middle of the night, the funds get seized. They get tied up in lawsuits. I can tell you, I've heard of the mythical letter from insert card brand that this company is the only approved to run on their rails more times than I can count on in the last decade. I've never seen one of those in person, but I've seen probably 30 or 40 cease and desist letters from that said named card brand saying, knock it off or we're coming after you. So, and I'm sure that my co-panelists are all smirking and nodding because we've all heard that this insert brand new startup credit card is the only one allowed to run on Visa, MasterCard, Amex, et cetera, but never actually seen one of those letters.
And just to add, in turn, that then puts the entire portfolio of your financial institution at risk if you're violating any of their rules for their rails.
Seems like things are getting a little better. People are not going around paying their utilities in cash and then their water bill in cash. I mean, that's how it started, right? 10 years ago. So thank you. I know it costs a lot to implement these systems, but hopefully soon. Thank you.
Thank you.
Thank you, Treasurer. The next panel that we're going to have is Government Operations, Public Safety, and Tax Administration. I was excited back when I joined the Cannabis Banking Commission when it was first brought together by Treasurer Chiang, sat on there with then BOE member Ma. to sit down with both CDTFA, with Nick Maduros, as well as Sylvie Stanislaus from Franchise Tax Board, to start discussing some of these complex tax issues of just how do we collect this level of cash through our doors, making sure that we can use armored cars and the complexity of that and continue to use there, and started to have some great meetings throughout the state with cities and counties. I know that the Franchise Tax Board in particular, they've sent representatives that are here in the audience, as well as the League of Counties, or do I call them the League of Counties? The counties, but we do have the cities here, but I know the counties are also very interested in the topic and are watching us online. But very excited to have both of you here join us, and welcome to the Treasurer's Office.
Thank you. Thank you, Treasurer, for having us, and thank you, panel members. I'm Trista Gonzalez, Director of the California Department of Tax and Fee Administration. For those that don't know about our department, we administer 42 taxes and fees, and I think this last fiscal year we will get to a revenue-wise about $100 billion in revenue. The largest program we administer is the Sales and Use Tax Program, but we also administer the Cannabis Tax Program. The cannabis excise tax right now is a 15% tax on the gross receipts or the total sales of cannabis. It's collected at the retail level now, and it's the responsibility of the retail purchaser to pay that tax. The sales and use tax also applies to those transactions. A little bit about the cannabis tax as far as CDTFA goes. Since 2018, more than $8.1 billion in tax has been reported by cannabis businesses. And this includes the sales and use tax, the cannabis excise tax, and the cannabis cultivation tax when that was in effect. In recent quarters, tax from cannabis businesses has totaled approximately $280 million, with revenue of about $250 million in the first quarter of 2026. As of July 1st of this year, there are just under 1,600 active cannabis retailer excise tax accounts. As far as cash and banking goes, what's impactful for our department is the collection of tax payments. We typically have a no tax collection or no cash collection policy within most of our field offices. But with most cannabis businesses at the time needing to pay their tax payments in cash, we did institute some cash acceptance exceptions that allowed those deposits to be made. Fortunately, as we heard on the prior panels, it seems like most businesses can get some banking. So I just wanted to share, for example, in 2020, about 25% of our tax return payments were received in cash, were remitted in cash directly to us. But in the past 4 quarters, so the last fiscal year, that percentage is now less than 5%. Similarly, we've seen the number of businesses making cash payments decline. So in the last fiscal year, 25-26, approximately 160 businesses made cash payments with our department, which is a decrease of over 70% since 2020. Accepting cash payments does come with costs, as has been mentioned previously on the panels. We do require taxpayers to make appointments with us to make their tax payments in cash, and we typically request 21 days advance notice. We also hire law enforcement to be present when those cash deposits are made. So that is a cost to the state as well. We just do that to ensure safety of taxpayers that are making the deposits, our team members, and any taxpayers that may be in the lobbies of our offices. We also, as mentioned earlier, hire armored car services, so that is also another expense. Not every one of our offices collects cash. We have 6 right now, and by October, we'll be down to 5. So there is some complexity as far as taxpayers. They may have longer distances than they previously had. few years ago in getting those payments to our offices. I think other than that, we're a partner with some of the other departments that you've heard of earlier, specifically Department of Cannabis Control, and helping with enforcement activity. And, I think we've seen a lot of success over the years in helping with the legal market. I'm happy to answer any questions after your presentation.
Okay, thank you. Jolena?
Yes, good afternoon, Treasurer Ma and members. Jolena Voris, I am the legislative advocate related to public safety issues for the League of California Cities, and that portfolio includes cannabis. And while I've only been with Cal Cities for about 3 years, prior to that, I worked for the urban counties of California for 10 years. So I worked on all of the marijuana legislation from 2014 on, whether it's medical marijuana, McCursa, Prop 64, all of the bills that followed. So I do know what it was like in the beginning and how much we've improved in local government and in the businesses. Right now we have about 185 cities that permit cannabis across the state. I think when it first passed, there was a kind of a gut reaction to prohibit it at cities because it was so new and they just didn't understand what it took. And it is a very long and cumbersome process to do it at the local level. I worked for San Joaquin County when we did it, and it took us a couple of years just to get all the legal stuff in place and have a pathway for businesses to ask for a permit. So it's not a cheap or a quick thing to do at the local level. So it is an investment. But we do have a lot of large cities that have early adopters in this space. Regarding banking specifically, when we first started, we were seeing a lot of large cash payments for, as you mentioned, Treasurer, water bills, property tax bills, sales tax, whatever you want to say. They were bringing in large amounts of cash, and that was a big adjustment for cities and counties. I think now that there's more electronic banking and improvements there, we're seeing improvements at the local level. But I just checked in with the city of San Diego, and they told me that they're still getting about 10 to 15 cash payments a month out of the 70 they receive. The rest of those are in checks. And so you still are seeing cash from some businesses. It's just going to depend on the sophisticated of that business or their ability to get an account or a loan. It also depends on the city. We're also very strong advocates of local control, as I think most members will know that about us. And Cal Cities, we don't advocate for cities to permit cannabis, and we don't advocate that they prohibit it. We just leave that up to the individual city to make that decision. So I'm happy to answer any questions for you and very much appreciate being part of the panel. Thank you.
Yeah, thank you. I do have a couple questions, Jolena. Because some cities are not permitting the dispensaries, there was a big movement toward ordering off the internet, off of Weed Maps, for example.
Yes.
And then we had to clamp down on that a little bit because they were advertising illegal vendors, people who weren't paying taxes. I mean, has that gotten better, this internet sales?
I think so. I think if you talked, I have regular calls with some city attorneys, and we always struggle with the illicit market, whether it's, as you mentioned before, smoke shops. We've worked in a lot of legislation with our county partners in the past few years to try and give us more tools in the toolbox to deal with the illicit marketplace. And we are very much involved in the intoxicating hemp effort for the past 2 years, because that was really dangerous. They weren't being tested. They weren't being permitted. You could go into any convenience store and buy it with really, really high levels of THC. So that was very concerning to us. But as far as online, I think there has been a lot of advancement in not only that business as far as the Attorney General looking at those businesses too and ensuring that they're following the rules. Yeah.
And just, I know Tim Moreland worked with me at the Board of Equalization, and one of the things we would say is, why do they have to hold their cash sales taxes for 3 months? Why can't they just, every single day, they can just download it into their account so that it's out of sight, out of mind, no temptation to, spend that money? Has that gotten better?
Well, I do think they probably are paying more frequently than quarterly if they have like a prepayment requirement. But if they have electronic access to, their bank accounts, or they can pay us as frequently as they'd like to.
Uh.
But as far as coming in person, then yes, they would need to make that appointment, and we wouldn't have appointments available every single day.
Got it. Okay, any questions from the panel? Yep.
Go ahead.
Thank you very much. Thank you guys for being here. One of the questions I have, and as you had noted, some of the continued decline in cash payments and some of the improvements and things that particularly, CDTFA, you guys have been doing. I had the pleasure of being on the other end of this at GovOps agency when a lot of this was being set up. So what I wanted to kind of go to that now is, what are some of the operational kind of efficiencies or coordinations that are still needed between governments, particularly between state entities, that will continue to ease things for the cities and local governments and law enforcement? So just as I know between CDTFA, it's you guys also have to, continue working with controller's office and other entities that are, handling or going to deal with the cash or the taxes that come in, and just looking at, are there still things that could be done at the state level that are improve a little bit of the way that some of the taxes are collected?
That's an interesting question. I think from our perspective, we would, be happy if taxpayers no longer needed to pay in cash. We could probably really reduce that for the, folks that have no other option, and make it more seamless and not have to spend the extra resources and time to accept the cash. But I think, I'm not really certain how to answer that. I could look into it a little bit more as far as how, the interfaces with the state controller, or, some of the other departments that go into, taking that cash or the tax money and dispersing it.
Thank you. Because where that's coming from is that I know that there were still processes that were still in paper at the time that, had not yet been digitized. And as you talk about some of the expenses that you guys have to put out in terms of armored car service. And I know that there are other things that had to be done for worker safety, counting cash at the time, increased ventilation.
Absolutely.
Cash counting machines that we're getting.
We have those all implemented still.
Yeah. So those are, just some of those things I'm looking at.
And like I mentioned, the law enforcement component of those in-person deposits.
Do we have fast cash counters now?
We do.
Okay, because that was one thing. It took forever. It took all day, 2 people counting the cash.
Yes. And we have, some ventilation, assistance in those cash cages.
Okay, good.
I'm really happy to hear that there have been, because of advances in a lot of different places, some good evolution when it comes to governance around how to collect cash at this level. I do remember some of the tellers at EDD. We were looking at how to create bulletproof teller windows, and we were looking at making sure that all of our employees had safety gloves on and other protective wear, so that they could make sure that they were being protected in collecting this cash, because it did have some resin and soaked up some of that at a higher level. What are some of the things that you guys look to as for that you still need when it comes to collection of cash, or is there the hope that we continue to move cannabis further into electronic banking like the majority of other businesses you deal with?
No, thanks for that. I do hope that we could just continue to move, those businesses that don't quite have it yet into that space. I think that the processes we have in place now have been fairly effective, but if we can continue to reduce the number of deposits that we receive, that would be fantastic.
I'll just say that I think the recent action on the Schedule 3, we're hoping that that will create some more opportunities to reduce the cash. And as far as impacts or things we need, I think it was always a big concern at the beginning about security, whether it's someone coming in with a large amount of cash, or you have a city clerk taking a lot of cash, or someone in the treasurer's department. So they've had to have increased security at, city and county offices. But hopefully that would be reduced when we get more into electronic payments.
So we share that hope. I mean, the double counting of money, we used to have bags of cash being dropped off at our offices on a consistent basis. I know Cannabis Control does have an arm teller, or I shouldn't say arm teller, but the bulletproof glass and the full safety procedures, but it's an incredible expense for all of that.
And then CDTFA, just the 100% penalty if you're late, even
50%.
50%. Oh, it's 50%.
Mhm.
Was that through the initiative process, or was that a regulation created by the tax agency
No, that would have been in the statute.
in the initiative?
I don't know if it was the initial initiative, but it is in the law,
It was.
the cannabis
Okay.
law.
All right. Some of you know that I think Prop 64 is a complete failure, and I hope that others want to reform it. And so, looking for good ideas, because it's clearly not working, in my opinion, as intended, but
Yeah, it's a 50% penalty now
50%
for the
penalty.
excise tax.
And what if they prepay some of it, but they haven't paid all of it? They still assess 50% penalty.
Mhm.
Okay. Any other industries assessed a 50% penalty?
Oh, you're
if
quizzing
they're late?
me. I don't think so.
Okay. Thank you. All right. Any other questions for this panel? No? Okay. Thank you so much. Good to see
Thank
you,
you.
Trista.
Thank you.
Okay. And the last panel, drum roll. People actually out there in the market. Tell us how it's going. We have one more speaker, Jim Araby, UFCW. Okay.
He moves.
Yeah, we do. Let us share.
Is Jim out there? Oh, and Lauren?
Mr. Markowitz, do you want to get us kicked off here? And
Hold on. I'd like them all to sit here so they can listen to each other. Is there a dog in there? That's where I would put my dog. I almost brought her today. Yeah. He was sitting here the entire time, so. All right. Okay, let's just start. Okay, Aaron, maybe introduce yourself and what you do.
Yeah, Treasurer Ma, panel, thank you guys for having us here today and for hosting us. My name's Aaron Markowitz. I'm the head of government relations and licensing at NABIS. Nabis is the largest cannabis distributor in the state of California. The role of a distributor is to take product from cultivators and processors to the retailers and thus the consumers. Nabis estimates that we move around a third of the legal product in the state at this time, a third of the legal product in the adult use market. As such, we move roughly $1 billion worth of wholesale product or $2 billion worth of retail product a year, the majority of that in California. And about 40% of our business is done in cash still. We are thankfully banked at this time, but as you can see, our origins were also in cash as well. And at our volume, that creates some serious labor and security risks inherently. There's some that are expected, and I think some that are less expected, but labor off the top is key. As you guys mentioned in alluding to the tax collection process as well, we have to double, triple count everything, but we have to do that in multiple stages from drivers when they're picking it up from a brand or from a retailer. And then again, at our facility with the whole cash ops team, double checking and recounting, then processing it through a safe that we have to pay cash processing fees on a regular basis for. Then recording it with our accounting team and properly recording it for tax purposes as well. One of the more interesting tax implications of cash businesses comes federally from Form 8300 and the state equivalent, which requires reporting of any transactions between two parties totaling more than $10,000 a year. At our volume, doing about $400 million in cash a year, there are anywhere from 5 to 10,000 of these forms required. We have 3 to 4 full-time team members just operating on this. The process requires us to collect an identification and the social security number of whoever is actually handing over the cash in a transaction. So as you can imagine, it's often difficult to collect an ID off of a, hourly minimum wage employee at a retail shop. Doesn't want to be reported to the IRS and the federal government on an individual level. So this requires tons and tons of operational work, and it's something that our team stressed and highlighted they'd be very excited about if and when business moves away from cash. Aside from that, there's also security risks inherently. Having this much cash on hand anywhere is a danger. And as such, we incur extreme expenses for security, have armed security full time. Our insurance is much higher because they understand the nature of our business. And anytime we carry more than a set amount of cash on any transaction, it's a very modest amount as well. Requires a follow car with armed guards as well. Our operations have to change and vary. We have to vary our routes. We've had attempted carjackings, attempted robberies. I think one of the most intense security issues we've dealt with, a quick anecdote, is in some of the unrest in May of 2020. Somehow a list of cannabis operators was distributed to nefarious operators, and Nabis found itself on this list of people anticipated to be targeted for theft. During those riots that were taking place, one evening, 12 armed men pulled up to our facility, and only because we'd been given notice in advance, we had hired 10 contractors, security, military, former contractors, and when those gentlemen walked onto our property, 10 red lights from lasers landed on their chests. And a loudspeaker said, if you proceed onto our property, you'll be met with lethal force. And that is an extreme expense, an extreme situation, but highlights real dangers to our operators. This was evening, but this was during our operating hours. We had cleared the building of our staff because of the pre-notice, but a very serious issue and just underscores the security threats that exist in a cash operating world. A few of the more unexpected implications of dealing in cash and or of lacking bank access or being precluded from banking come from ancillary services to our industry as well. Things like payroll processors. As a small business and a startup, you rely on third-party payroll processing pretty heavily. We're on our third processor right now because most of them are backed by people that are funded federally and cannot work in our industry. Similarly, landlords are extremely difficult for us to find approval to work on their properties. Testament to, a well-regulated state system, we're pretty limited and regulated by compliance as to where we can be, security buffers, distances from schools, and other things. I'd estimate in my experience only roughly a third of the properties qualified to host cannabis will actually be able to get landlord approval. due to their lending policies and the preclusion against lending to cannabis operators. So it makes an already small market that we're talking about trying to expand access to and curb illicit activity even smaller when we can't even get approval of qualified sites. Finally, our owners have been debanked multiple times and on multiple platforms, multiple senior staff as well. This trickles into day-to-day life for our employees and has real implications. And then just finally, as a business, our access to financing is severely restricted. I think the different panels earlier speaking about the banking restrictions highlight some of the sources of that. But a testament to that, 80% of the new capital in the industry 2025 came through private debt. And that often comes in a high teens interest rate, as the bankers spoke to previously on the earlier panel. Those that are fortunate to access capital through an established bank are still looking at high single or low double-digit interest rates. So there's a host of factors, all of which add extreme expenses on an industry that faces small margins and high operating and compliance and regulatory costs already. So anything that can be done to increase the access to banking for the broader industry is going to benefit everybody in the supply chain. Thank you guys for your time.
Close.
Hi, everybody. Aaron, thank you. That was instructive, and I feel all of that pain. And to do it at that scale, I commend you and the team. Hi, everybody. I'm Carlos. People call me Los. I'm a farmer, co-founder and CEO of Green Horizons. I have a large-scale cultivation facility in Coachella. There she is. 10 years in the making, founder-led. A lot of blood, sweat, and tears to build that building. To Aaron's point, we're not really making money. You know, competing with the illicit market is incredibly challenging. And the 2 points that I thought would be most relevant for me to share from my experience, Aaron touched on one of them, safety, no doubt. You know, many of our distribution clients, we've been primarily a bulk shop to date. We've only been operating that structure for 2 years. It's cash, right? So when you have hundreds of thousands of dollars in cash, you know, it presents the obvious risk. The other part of that, this is a $75-80 million project. The development side of that was probably 35-40. The rest of it was private debt, high teens. We were lucky enough to source that kind of capital from sophisticated investors that were largely from other industries. The chilling effect that banking presents to folks that aren't in our industry day to day is very real. You know, people are nervous about getting involved in the sector because, you know, do you have banking? Do your clients have banking, et cetera, et cetera, et cetera. So it's a big mountain to climb. You know, that was chiefly part of my role as a CEO to get this thing off the ground. So I spent thousands of hours of my life convincing folks that have made money in other industries that have it a lot easier than cannabis, saying it's a safe place and it's maturing and it's going in the right direction. And we're not there yet, but we're on our way. So I would say that if there's anything that we can do as a state, you know, in 96, we led the way. California, you know, the beacon, always progressive, always ahead. The honest, and I'm an operator, I live it day to day. California isn't there anymore. The taxes, the compliance, everything that Aaron spoke to, we're competing with the illicit market that is profiting by putting products in the world that harm our children. The high schools are flooded with these products. You know, and I think the point about, are there other businesses that are penalized? And I think that's the word. You miss a tax payment, 50% hit. Why? We're not making money. We're like more akin, in my opinion, to justice warriors battling the illicit market every day. I work 6 days a week, 12 hours a day, and I do it in part because I love it. But there's so much paperwork. There's so much stuff to get through just to keep the authorities happy. It's completely demotivating as an entrepreneur. It really, that's my experience. And I don't think that there'd be a lot of people in our industry that agree with that. We're looking for a partnership. And I think California did do a great thing with SB 1326. Our approach to interstate is smart, it's strong. If the Attorney General deems that it's not going to bring significant harm, we can move on that. We don't need congressional appeal. Is there an analog to banking, CalCap, other programs? I don't know enough about the inner innards of how these things come together in your world, but what I'm saying to you is, if California can lead again, and we have the will to do that, your operators do, I promise you that, we will join you in that effort, and California will win out in the end. We're playing from behind now. I too share the opinion that Prop 64, I understand how it came together. I understand that it's a creature of compromise. This is how things are done. And it was perhaps good enough for the time. And we all went at it as best we can. I think we can admit to ourselves, because we're all adults, it didn't really work. In fact, I think it's pretty easy to pinpoint how many things have gone wrong. How many more panels do we need to do to actually act? Hey, that said, I would love to be part of an effort with anyone in the state of California, the people in this room and otherwise as you deem fit, to come up with our version of SB 1326 on banking, so we can reverse and course correct what's working against us and position ourselves as a leader again. People are fleeing the state, other industries too now, right? Elon and all these guys, right? Say what you will, you know, they're leaving. The billionaire tax, you're making it more challenging for people to want to do business here. So how can we course correct that? I'd love to be part of that. And I really appreciate the opportunity to be here. It's meant in the spirit of partnership and care. I really care about this industry. Cannabis saved my life 10 years ago as part of my healing when I overcame a bout with cancer. I deeply care about this issue and making sure that products out in the world are not impacting our children adversely. That's happening, California. The people at this table are part of an effort to do it the right way. Tax us less. Treat us like similarly situated other businesses. I'm a farmer. If I was making milk or soybeans or something, I wouldn't have many of these issues, but we do. And cannabis is worth the fight. Schedule 3 is a big deal. It's moving us along the way, and progress takes time and commitment. And you have that commitment here at that table. Thank you so much for your time.
Jim.
Hello, everybody. My name is Jim Araby. I'm the Director of Strategic Campaigns for UFCW Local 5. We're a union that represents about 25,000 workers in the Northern California Bay Area, part of a bigger union in California, about 150,000 workers, and about 5,000 of our members work in the cannabis industry. Our union has been at the forefront of this since the Prop 215 days. You know, we've been at this for 20 plus years. I've been at this for 15. Doing this, you know, first at the state level and then now at the local level, organizing bargaining contracts, working with some folks here at this table to try to figure out these challenges. So I thank you, Treasurer Ma, for inviting me. Appreciate this panel very much. And I just, you know, would say federal cannabis policy doesn't just inconvenience business owners. It denies workers the stability, the stable employment, portable training, retirement, and publicly supported career pathways available to workers in nearly every industry. You heard it from the business owners, you've heard it from the bankers, you know, all that filters down to the workers. You know, I've negotiated statewide agreements with large multi-state operators, and it's really even hard to get a contract. We try to partner with our employers. You know, again, 2 at this table, right? We've had a lot of discussions about how to create the type of jobs with the right type of benefits, but it's really hard to do when employers are just, you know, struggling just to make ends meet. So we've figured out a lot of different creative ways to make that happen. But, you know, again, workers in this industry are denied, unless employers are large, right, are denied 401k pension plans, different types of health insurance, you know, paid leaves, bonuses, you know, educational reimbursement. You know, the volatility of this industry makes it hard to retain a job in this industry. You know, our local we've lost 15 different employers in the last 5 years that we had organized. At one point, we had close to 1,500 workers in our industry. In our local, we're down to about half that, maybe less than half of that. It's grown a little bit. A couple of our employers are in the acquiring stage. But, you know, one of our employers here, right, it's just made an announcement that they're closing their manufacturing facility in Santa Rosa. You know, so we're in the process of that. So not allowing for creating more barriers of entry, particularly around banking, you know, makes it really hard on the workers because then they don't even have access to certain things. It makes it harder for them, you know, as they have an unstable work environment to do that, you know. And I think another piece of this, and you've heard it a few times, you know, you put up that video of May 2020, you know, we had an employer in Oakland who was, we had 15 workers tied up in the back of their dispensary, held at gunpoint and robbed in 2020 because of the cash business. We've had other members abducted, taken across the Bay Bridge to be told, you know, open up, you know, the cultivation site. You know, these are things that workers experience, you know, that has been highlighted here. And we deal with it, you know, from the union perspective, because our job is to, you know, protect the workers. It makes it harder even to sort of figure out how to create the right type of workplace safety and environment for workers to feel safe in, you know. And luckily we have partners that are employers that have really invested in that, but that investment in that private security, that investment, you know, that they have to make then takes away from other investments they could make that I know employers want to make. And so it's really critical for us to think about this, not only in terms of the business perspective, but the jobs perspective of part of that, right? You know, if the costs on all the other elements of the business are increased, it makes it less and less money to be at the table. These jobs don't have to be minimum wage jobs. These jobs don't have to be, they can be jobs at a much greater level. You know, we can negotiate and build, you know, all kinds of things that we've done in other industries. But, you know, the cost of doing business is so high, particularly when it comes to banking, you know, when they can't get the available commercial loans, when they can't figure out how to finance their debt. You know, those things are massively cost prohibitive for a lot of folks. And what you start to see, you know, other than the scrappers here at this table, you know, you start to see a large consolidation of this industry, right? You know, there's a massive consolidation of this industry, you know, and that's not good for workers either, by the way, right? When you have massive multi-state operators, you know, that can consolidate, and we have some protections here in California that allow for workers to have access to wanting to have a union or not, but when they're operating massively non-union in other parts of the country, you know, the leverage that workers have, never mind the regulations already put in place in employers here, the leverage that workers have is diffuse. And it makes it harder for the employers that want to actually do good by their workers, you know, compete, right? And so that's the things that we, you know, and we're full force behind, you know, reform. You know, we were at the table with Prop 64. You know, the industry's overregulated in California. There's things we have to do to figure that out. But in terms of banking, you know, we would definitely throw our weight behind any sort of creative spaces to, you know, to make things easier for our employers to be able to be banked and, you know, pass off some of those savings to their workers and be able to negotiate, you know, better contracts. So.
They're hard to follow.
Thank you. Lauren.
I will try and go quickly just because I think everybody else has spoken so eloquently, and I do want to leave room for you all to be able to actually ask questions of us against this backdrop. But good afternoon. Thank you so much for this opportunity. I am truly grateful. My name is Lauren Carpenter. I'm the co-founder and CEO of Embark and Embark Events. Embark is a cannabis retailer operating 20 locations across the great state of California. And Embark Events is a licensed cannabis event organizer. And so what we do is integrate on-site sales and consumption into some of California's largest and most mainstream festivals and events. We do that because it allows us to talk to tens of thousands or hundreds of thousands of people, as opposed to just a couple hundred who we may see walk through our doors any given day. And our mission in both retail and with events is to destigmatize cannabis. And events allows us to do that at a greater scale. So you can find us today and for the next week and a half at the California State Fair at the California Cannabis Experience. So I certainly hope to see you there. But I really want to echo praise for those who have spoken before me. I think everybody has eloquently touched on sort of many, but not all of the issues. I think it's important that understanding even things as simple as where we can cite right? You think you get through the regulatory hurdles and red tape by getting to a place of a zoning ordinance being in place. And then you realize it, of those, 7 available properties in a community, 3 or 4 of them have institutional debt that preclude you from being able to be there. So I think some of the nooks and crannies that were raised by my colleagues were really important. Taking a step back, I joined this industry almost 10 years ago after working for a variety of industries in government affairs and public affairs. And I shifted into cannabis immediately after Proposition 64 because I realized that cannabis had largely existed in the shadows and it needed folks who could be bridge builders between government, who doesn't always understand the people it is seeking to represent, right? And the people who most often don't understand all the ways that government can and should work with them and for them. And certainly this industry needed folks who could figure out how to do that tap dance. So being here 10 years later, it's an honor and a privilege, and it's not something I take for granted because this is exactly the type of bridge building we need to continue to do in order to create a sustainable industry. So again, I thank you for that. When we talk about banking, again, my colleagues have touched on so much of it. I focus on 2 things, our people and our growth. Our people deserve workplaces that are safe and functional. They deserve to operate with a reasonable amount of stress, right? We want to be compliant, we want to be good actors, but they deserve to operate not under such undue burden and stress of complex and shifting regulatory requirements and goals that they don't know what doing a good job at their job looks like today versus tomorrow. And in many ways, banking and the ancillary impacts of that can have an effect there. The other thing I care deeply about is growth. Not specifically for my company, but for our industry. Because in 2016, California voters overwhelmingly voted. It was the highest passage rate of any legalization measure at that time. They voted to usher in an era of safe, tested, and legal cannabis. And we haven't quite gotten there yet from a policy perspective. I'm not here to criticize how we've gotten here. I do think that California has innovated and led the way. I think we continue to drive the conversation. I think we cultivate the best cannabis you will find anywhere in the world. So I am and will always be Team California. But we have massive opportunities to allow for growth. My business started in 2019 at my dining room table with my husband. I am proud to be a family-owned and operated business. I'm proud to be a small business, and I'm proud to be one of the very, very few that is growing in the state of California when everyone else is contracting. I fear that the regulatory environment and many of the hurdles that continue to be implemented at virtually every level will slow or stop or actually reverse that growth. And we need partnership from everyone here and at every level of government to get to a place where that isn't the case. So I look forward to contributing to this conversation today, and I hope to be able to continue to contribute to it because I do believe we all have a shared goal, and that is the realization of what Californians voted for, which is a functional legal market. Thank you.
I'm not sure I'm that long. I go this way. I'm going to trade. Hello. I'm Terry Wheatley. I'm the chairperson of Groundworks Holdings, and that's a cannabis company that has a portfolio of brands and dispensaries in Southern California. And I want to really speak on a personal level here. By the way, my CEO, Brett Peace, sends his regrets for not being a part of this. But I got in the cannabis business 9 years ago. I have spent 4 decades in a highly regulated industry. I've been in the wine business for 40 years. And I got into cannabis thinking that I knew that at some day cannabis was going to overtake daily use over alcohol. And it has. And it has. So I come from regulation. I look at what we had to go through in alcohol, and I have never seen such a regulated high hurdles than I've seen in the cannabis business. So when Brett asked me to come and speak today, I wanted to speak from my heart and talk about my personal experience. As the chairperson at the time of CannaCraft, board member at the time, not chairperson, I was given a check by CannaCraft for my board fee. I deposited it in my local bank.
The bank I've done business with for 20 years. I know every single teller in that bank. I knew the bank managers one after another. And they called me and said, Terry, the bank just shut down your account. Not just my account. I was on my daughter's account, my 6 grandchildren's account, my business account. Everything was shut down. I went back. We were able to get it reinstated. But just like the folks before stated, a 90-day review. They reviewed me again in 90 days. And then BMO came in and bought Bank of the West. They shut me down again and they closed it out. No more banking at my local bank that I go to every single week. Thank goodness for the credit unions, because the credit unions took my business, took all my grandchildren's accounts. We converted everything over. So that's on a personal level. Now, my daughter works for a cannabis company. She actually works for KSS, so a competitor to yours, but nonetheless, she's in the cannabis business. She went down. She makes a very good income. She had excellent credit. She went down to buy a house in Modesto and she was denied. Why? Because of her employer, not because she had done anything illicit. She was in a regulated market. She was denied. So we went to the credit union. She was able to get a loan through the credit union for her mortgage. Now, the third thing, the elephant in the room to me here today is what Clint said earlier. 60% of this business is illicit. And we're all talking about regulating and how we're going to do banking for 40% of the business. 60% is out there making money. And I'll give you an example. I live in a very small farming community outside Modesto. It's called Houston. And 4 or 5 years ago, I saw all these smoke shops popping up. And then little convenience stores. And I started tracking it down. There were, at the time, 5 years ago, there were 8 smoke shops in my community. There are now over 70 smoke shops selling illicit cannabis products in these accounts. So I decide, being an advocate, consumer advocate, and I had a granddaughter, 19 years old. I said, you know what? I'm going to send you into the smoke shop. And I want you to buy things that buy anything. And she went in, came out with brands that I recognized from our dispensaries. Those brands that are in the legal market and in the illegal market. And she brought it out, and it's like, how can that happen in our state? So to me, I look at this on a very personal level. I am involved as the chairperson. In last week, we had to let go over 60 people in our Santa Rosa operation in that headquarters. And I speak emotionally because these are people I've worked with for 9 years. And I participated in letting them go. You can't pay all the benefits. These are people that I've tried to help get loans. I'm now spending nights writing resumes because of illicit market, because of predatory lending. There is just so much emotion that goes behind this. It's like, we have to do something different. I sit with Brett at our banking meetings, at our lending meetings, at our bringing in investment. They're absolutely right. People are charging 15%, 19%, 22%. We have to be in an environment that is fair. We are in a legitimate market and we are treated like criminals. I'm a grandmother. I am not a criminal. We should have the regulations, the enforcement, and even going enforcement. We've gone and spoken at the higher levels and said, here, I will give you 20 smoke shops that are selling illicit products. What can you do? Oh, we don't enforce. That's local law enforcement. You go to local law enforcement, there's great. It's like, Terry, great. But I don't know if they're a licensed or an unlicensed. I can't tell the difference. So it's like I feel like we're a dog chasing its tail. So why I sound so emotional is I just participated in letting 60 people go. And last night I was writing resumes for about 5 people. So anything that our government, state government can do, you have people at this table. Thank goodness for the credit union teams that have put banking, but that's a tiny little sliver. We don't have the power there. So whatever we can do at the state level to just make us, again, I come from the alcohol business. We should be able to be treated as fairly as alcohol, cigarettes, anything else. That's all we're asking for. And whatever you said it great, Aaron, you just laid it all out, all the problems with, I go in and there's a giant room that's called the money room. It's the cash room. It's like, oh my goodness, this is ridiculous that we have to operate this way when we've got big California liquor distributors operating so much differently. Just treat us on a level playing field. We are not criminals.
Thank you. Tim knows because he was with me at the Board of Equalization, but we started saying, hey, why can't we regulate this like alcohol? You know, it's a well, longtime system. Lori Ajax, right, was head of agency, and then she went over to like the bureau, and I think she got frustrated because it just became too complicated. And so that's the reason I'm very happy to be here to do this hearing 10 years later, because I did not support Prop 64 because of the high taxes. And, talking to many of you out there or here on the panel, you've been frustrated and you've been telling us this is a problem. And so hopefully today's hearing will be recorded. It will be on our website. I know that there's reporters here in this room that have been covering this for many years. And so there's nothing, I think, new that he is learning, but something has to be done. Something has to be done. Prop 64 is not working. And we just need to come together, figure it out. And, like you said, we need to be good partners. And I just want to give Clint, kudos. He has been here the whole time. I know he just started, as the director. His hands are tied in certain aspects. But when you bifurcate licensing from enforcement and everyone blames each other, like you said, 60% of the market is illicit and nobody is going after them in a methodological, just like we used to do like cigarettes. I mean, if you sell one pack of illegal cigarettes, trust me, CDTFA, BOA, we came down. I mean, we waited outside one of the tribes one time because illegal cigarettes were coming through Canada to the tribes. And as soon as they drove off the tribe, we confiscated the truck and it was all illegal cigarettes. And we would go after all of these retailers, these corner stores. They are scared to death of selling one illegal pack of cigarettes. But like you said, these smoke shops are popping up all over. Nobody is enforcing. We have to do something. Otherwise, we've lost the market. That's what I said initially. We're number one and now we are like last. So anyway, I'll know how I feel about this. Okay. Anything else, Patrick?
Yeah, Jim, I was struck just because I know of your work working in this industry and the Teamsters as well, trying to figure out what to do about our workers, making sure that they're well taken care of and to treat the workers in this industry as we treat others. What are some of the steps that the UFCW and others that you know of have taken down that road to make sure that workers are made whole in our state?
I think there's sort of 3 things that come to my mind. One is, we're partnering with, companies that want to do it right, like Lauren's company, Embark, and, Terry's company, March and Ash in Southern California. There's a few others that we've worked with, to really tell businesses you can do it right. The union is a good partner to work with them, right? And then through that process, working on compliance issues. Sometimes there's just issues related to compliance on health and safety and worksite issues. We have worked very hard on the legislature to pass. I know some businesses may think they're onerous regulations, but some around education, around health and safety, and really sort of trying to assist and partner with that. We raised actually for a time, had raised quite a bit of grant money to do trainings on health and safety and to partner with businesses, that, bring workers in and have them trained so they get OSHA, Cal OSHA certified. We actually created a whole cannabis curriculum around health and safety, which, partnered, and we had a lot of our business include those here participate in that. So we really tried to focus on working with the current existing partners. I think the thing that we've done, we haven't done as good a job because I think it takes, and we haven't really, the other a lot of folks talked about the 60% of the other market. Y'all have read stories. I know Lowe's probably out in your area, right? There's stories of like these illicit farms and just the conditions that workers face in those places, where it's like we have wage slavery going on in some parts of the state as it relates to this product. And we have, and I think thinking about on the enforcement side, not only on the state enforcement through, district attorneys, the attorney general's office, I know some of us in this room, be wary about working with the federal government's Department of Justice, but around these issues, I think there has to be a better and more coordinated effort, because there's the enforcement side as it relates to sort of, the utilization of land and, the evasion of taxes, but there's also just the actual workers, right? People that are being human trafficked, that are in these places, that 60% of cannabis that is grown and sold illegally is also moved by people who are workers, right? And some of those aren't participants. So I think on that end, we're going to have to do a better job. And, that's where we've sort of lacked, that piece. And then the third piece is like continuing to think about creative partnerships with cannabis industry groups to drive better and stronger policy, at the state and local level. So those are the things that we've sort of worked on.
Thank you very much. Thank you guys again very much for being here and sharing your stories. One of the things I wanted to go over is, particularly as we had the slide up earlier about the new facility, Los, that you built and built largely, in cash. And I guess I'll go to you and then, Terry, some of like what you're facing going from the bank that used to be at now to like credit union. How are you having to outside of just having the cash, finance the facilities, the equipment, things that that you have to do? If you could speak to what you've had to do there.
Sure.
Thank you.
Happy to. Yeah. And, part of me putting built-in cash was, being a little bit performative, I suppose, but there was construction financing for the building, and the private debt that that was raised to launch the business did in fact arrive via wire, right? We bank with East West Bank, who have been great. Thankfully, there are equipment financiers and stuff out there. It is, teens, right? I have the benefit of having the two largest investors in my company are like all in. So, leveraging their credit profile and such to get certain financing done is an option that I have and has helped me tremendously. But it's very, 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 very challenging on the ops side. You can figure out the other stuff if you have those pieces. It's just more my concern for my employees is what keeps me up at night. And, there's been plenty of stories here about, incidents that involve safety and such. We've had many of those too, attempted carjackings and such. So it's like, for me, resolving that feels like the most immediate issue, and, sympathizing with your experience and the very important role that you play. How do we take care of our people? Let's handle that. So I think a real focus on that and making banking accessible. You mentioned the current administration and the DOJ and such. All the more reason for California, not to belabor it, to do a banking analog of some kind to SB 1326. Let's figure that out and be the example. Say everyone in the supply chain is actually being banked because California made that possible. And then to your question, sir, I think a lot of other financing options will open. We have to solve the core problem. That'll come next. We have to solve it on the ground. And then, the other piece of that, of course, is enforcement. Separate conversation, separate panel, separate day, but not really, because it's like without the enforcement piece, we're up against what we're up against every single day. And we're still here. The people at this table and everyone in our industry And, we care. This is deeply, deeply personal. We believe in the mission, right? And destigmatization is at the core of everything that we do. Like, this is medicine. We're finally getting our due for that. So I think just hyper focusing on solving the boots on the ground problem will open up additional doors for financing on construction, scaling, all the things, right? And how do we draw the enforcement part of the equation into this conversation? How do we do that in this partnership, this revised partnership? How do we get them at this table too and cut through the red tape, right? I think that'd be worth looking at as well.
Thank you. I do want to say exactly as you said, Lois, about destigmatization, and honestly, kudos to Ms. Carpenter, because I feel like what you've built and how you are supporting the industry and actually doing the events really helps to do that. And that's really amazing. So maybe a bit of a lightning round, because I've heard so much and I really, really appreciate and feel your passion from this panel. But what are the top 2 things, because it could probably only be a couple, since we've been talking about many of the challenges for several years, if not decades. What are the top 2 things that you feel, starting with Ms. Carpenter on down, that California should focus on in the next year or 2?
Can you hear me? Kind of.
Kind of.
Okay, sorry, I'm just gonna fully linger. This isn't gonna look weird on camera at all or anything. Great question. Thank you. I think we need more meaningful partnership with our regulators on a reassessment of what can be done. We talk a lot about the confines. But for anyone who's spent any time in Sacramento, there are confines everywhere, and those confines impact every industry. And so we need to stop pretending. Some of it is real and some of it is perceived. And so we have to stop pretending that we can't come up with creative solutions. There are always outliers on both sides of the spectrum, but we have a lot of extremely reasonable people in this industry with extremely reasonable and rational ideas and solutions. And we need to come together and be pragmatic rather than mired in policy to actually get things done. That's broad, so that was a cheat because that could tackle a lot of things. And I think secondly, we need help with educating, right? We're a decade into Prop 64. I work in small communities, and communities, most often, I'm often the first retailer to open a dispensary in a community that has not yet had legal cannabis. I spend between 2 and 5 years in a community listening tour before ever getting to open my doors. And I think we need help. We need the bullhorns that our legislators have and our elected officials have. We need help coming to consensus on where we are, such that we can then start working toward where we want to be. Because while reasonable folks in this room understand what cannabis is and what it isn't, the fact of the matter is, whether we're talking with banks or local law enforcement officers or city managers or city council members, we don't all have that baseline understanding of cannabis. We are still facing so much stigma, we can't even get to the starting line in the conversation. And so my hope with work like this is that we can amplify a more unified narrative that just gets us to that starting line, so that we can do my cheat code of number 1, which is start working together on more reasonable interpretations of what exists today.
Great. Thank you.
Very well said. And I would say that also takes time. So what could you do immediately? And to me, that's enforcement, and open up banking in some kind of way, safe banking, so we have access to capital. Our companies, the successful companies that need to keep standing, is to have access to affordable capital so we continue to pay our workers and keep our manufacturing open. So enforcement and safe banking access to capital.
Thank you.
Yes, and yes on both, all that. I would say the 2 things are, 1, I do think we need to figure out how to not only tackle the illicit market as it comes to moving the product, but the illicit market when it comes to the labor perspective. There are things that we can do now under both federal, state, and local law and enforce on just labor standards, the human trafficking aspects, the lack of wages, all of those things. And we got to be much more coordinated on that, state and federal agencies, along with sort of local. I think there's a lot we can do there. You take away the labor, you take away you take away everything, right? Like that's why we organize labor, right? So I think really looking at it from that perspective, I haven't heard a lot of that discussion. I think we need to do that, and you'd have a willing partner in the UFCW. I'm sure our other labor partners, the State Labor Federation, would all be aligned on that. So I think that's something that we should really think about. And I think I want to echo, because Lauren and I have been in many of those local community battles together. I do think there has to be a much better job from the state level at reaching out to local communities and offering assistance to them to understand what this is and isn't. Because I think we spend an inordinate amount of time in city council meetings and community meetings and others. Lauren and I were in this meeting a few months ago where I felt like I was back in 1985, reefer madness. And I was like, this is 2026 in the Bay Area. Why are we having this conversation? So I think the state can do a better job at coordinating with local legislative and community bodies around what this is and isn't in communities.
Thank you.
Number one, we need to support the people that have gotten us here, and let's donate to Fiona's campaign for Lieutenant Governor. Let's make sure that she gets elected for that, and other leaders that have fought for this plan for a very long time. And let's follow up on this conversation, a dedicated working group, a coalition of the willing. Let's make it our own, starting with the people at this table and whoever else that we can rally from the industry to work hand in hand with government to solve these issues and make sure that there's actual follow through. Because what happens when we leave here today? I'd love to set that intention for this to happen again soon.
Thank you.
Yeah, I guess going last, I'm going to probably echo some of the stuff that's already been said, but I think maybe a new point here would be increased retail access. Prop 64 set it up so there's a lot of areas that are just restricted from legal authorized sales. But at the same time, you have dozens of smoke shops, so legal dispensaries, even not just, posing as a smoke shop, straight up posing as a dispensary, operating here for the illicit market. And then, as we mentioned, they pay no tax. So that leads me to enforcement, not just legal enforcement, right? Like, yeah, put these people in jail, they're not going to do it again. But CDTFA could come in and instead of charging, legal operators 50% fines, they could come in and make an effort to collect all the tax whenever they find an illegal operator from every sale that they have on record. They could look at their volume of products and say, this is taxed at X rate for, excise tax, and actually, collect a lot of money for the coffers of the state. So with that in mind, I'll also echo Terry's point on capital access. My team really stressed that this is the biggest factor to growing a small business as we try to expand and look at other states and grow within the state of California as well. Some of that's tied to rescheduling. Obviously, that'd be a huge boon for the industry. It would cut to 280E tax restrictions. That alone, we estimate, is a 10 to 12% bottom line increase for these companies operating with small margins. But then the reduced operations costs, the security costs that I went over earlier, as well as just equitable capital for business improvements and building. Something, in single digits instead of almost over 20% is just going to make a huge difference in the overall health of the industry here and the tenability going forward.
Great. Thank you so much. Very helpful. Thank you.
On behalf of the California State Treasurer's Office, we really thank everybody who took the time to be here. I think that Loesch, you sort of pointed it out. I wish in some ways that we could have people that have been involved in the black market here so we could hear why they've decided to go down that path, but they are the bad guys for a reason. And you guys are the good guys, or at least the folks that are really trying to figure this out, not only for yourselves, but also for our state. And that is much appreciated. The hope with this gathering was multifold. You saw the treasurer and I having a couple conversations about our continued frustration, hearing from particularly this last panel about folks trying to figure out how this could work, trying to get those strong labor laws that we have on one hand, and marry them with this industry who has not seen maybe enough regulation when it comes to that. But bringing together cannabis control, again, Director, very much appreciate your continued participation, being here and listening to everybody here. I think it is extraordinarily important. Our banking partners from the Treasurer's Office, it's incredibly important to us, the banking industry and the health of the banking industry in our state, and trying to figure this out and keep going back at it. I think that is a sign of a healthy regulatory environment that hopefully our state could continue to thrive and be that #1 state when it comes to cannabis, as well as an economy continuing to grow. Treasurer?
Yeah, and since I'm a tax accountant, served on the tax boards, I know that our tax agencies tend to audit you because you've been paying taxes. They know you're kind of safe and you're compliant, and they don't go after the illicit market, which is what we started when I was on the Board of Equalization. We were supposed to collect taxes on the medicinal dispensaries, and we didn't know how to do it. We went in the parking lot, picked 3 days out of the month, extrapolated, added a dollar amount, and then sent them the bill. And that still happens today, but to the legal guys. And this is something that, I know that Chris Clint is here, right? There's so many people, I know that we're always, auditing and going after the 40%, but how about the 60%? Like, how are we going to get us to really target the 60% so that the 40%, has the fair shot? Because right now they are dying, right? They miss a payment, they're going to go bankrupt pretty much. And then they're out of business and they're losing employees. So that's what I would like to see. Maybe we can work together with other law enforcement, because it's not right and it's not fair. These people are doing the right thing. They're trying to pay their taxes, employ people, and yet, they see all these other people that don't have any enforcement, not paying, their people, not treating them right. And so it's very, very frustrating. Thank you to this last panel, but I know that has been also an issue that people addressed, is the tax issues.
Thank you all. Thank you all for being here.
Thank you.